Okay. Let's see, guys. Let's see. Um, we're gonna go over dollar index here really quickly for the trade review for Monday, March 23rd, 2026. I do have the chat pulled up here. Um, if people end up hopping on and we end up having a little bit of a discussion. Today, like I put into the Telegram, today was for me a no trade day. Reason being just because you look at NQ on the overnight and the Trump news that came out, I believe at like 6 a.m., somewhere around that 6 a.m. time, like 6:05, and price goes almost like I forgot how many, almost 800 handles in just a 15 5-minute bar. Okay, so I'm gonna go over my bias and understanding of like dollar index, and then playing that New York Open position. There were some positions I liked. Seeing sells coming in there at the end of the day, just because, or not the end of the day, but like the lunchtime, like almost 10 a.m. going into lunch, and I'll explain those too. So really quick, looking at dollar index. When you look at it, we've been in this range, right? It looks like we're almost essentially like accumulating to go higher, but it's still now, since we've delivered the liquidity of the 140 level, starting to push and fall over. So, with that being said, it's like today, when you look at the overnight, same time, right? 6 a.m., price goes up to that 115 level and just dies, right? So everything, when we see situations like this, we were looking for more upside on indices futures. And we were looking for this type of move, but just not in a 15-minute bar. Okay? And so, same thing we were looking for here on the daily was to respect the supply candle here, respect the 100 psychological level, and start to roll over. And so, like I said, just didn't expect it in a 15-minute bar. Now, when it comes to NQ today, I'll move this really quick. So, for me, what it really looked like was when we came into the opening of the week, what we were going to go live and talk about today, that's why I didn't go live, was I wanted to see price basically accumulate, right, inside of an area like this, like it did here. You guys, if you can notice, the price action right here is really, really nice, right? I wanted to see something like this, but they're in New York. And so when you see, one candle, right, which this candle opens here at 6 a.m. Central Time Zone and goes up all the way to 24,700. So let's see how many points that actually was in one 15-minute bar. All right, a little bit over when you get to the really top. Let's just say 8. Let's just round up to 900. Okay, it's almost 900, 875. Let's just say that 875 plus points in one candle. Right, so my game plan coming into the day, right, understanding what's high and what's low, is I wanted to see this delivered maybe by Wednesday or maybe by like tomorrow, and like maybe we still stayed inside this 24,400 area today. But because we delivered the previous day high, right, 24,650s pre-New York, for me, right, just context wise, I was favoring sell side. Now, a lot of individuals, right, after price falls off here going into the 7 a.m. candle and then 7:15 to 7:30, right, and it starts to kind of hold up in this area until we get into the New York area. Now, a lot of individuals are going to want the rollover shorts, right, because we've scaled so fast and so dramatically. But this is where I talk a lot about observe the masses and do the opposite. Right, this is a definite one of those situations where prices scaled up super fast and made a high here, and now, right, 7 a.m. This is 15-minute bars to 7:15. Now you've kind of got market making a low in here, and so for me, when you look at the range of the day, you can use Fibonacci's, you can use your eyes, however you want to look at it, but this is your low of day, and this essentially is your high of day. So from the buy side of Fibonacci, right, anything really to me above that 50% of the range is a pretty dangerous buy because you're in an area where I think the best buys really came obviously down inside the accumulations, right? And so when you look at this price and you look at where it was starting to Dorito pattern, right? Or bullish flag, whatever you want to call it, right? It was starting to do that type of pattern and trap people not knowing that, this, like I said, this is your low, this is your high, and people need to know, where the 50% of the range of the price is. And so for me at New York Open, I favored, right, price to go on the buy side, right, to respect the 15-minute demand, like as a spectator. Like, this isn't, to take a trade, but I was in spectating this here, that they would hold this level and trick buyers at New York to think price was going to roll over and take this low, and that's essentially what they did, right? So if you look at let's see here, let's try to see, if you look at 15 and 5, right, the New York Open is here, right? So this is the New York Open, this candle right here, 830 to 835, and then you have the next candle strength, 835 to 840. Now think about what I always talk about with location, right? The only difference is like this setup, you want this to be happening down here instead of up here, okay? And so you have 50% of the 15-minute candle, and then inside that 50%, right, you have your 5-minute demand area, okay? So then New York opens, it comes down and plays right into it. Next candle shows that sign of strength. Then you have the next candle, 840 to 845, going into that 15-minute window that we find the best transitional type of setups. And then you see the response, that 845 to 850, where it's a 5-minute bullish engulfing and price starts to get out of the 5-minute demand area. Now I thought if I was playing something like that, I would like to play something like this. But when you also look at the price just for your normal 1 to 3 type of entry, this would have been tight, right? This, like, it's basically just a little bit distorted. Like if I went back and showed you prices from previous days, it's a little different, because like now when you really start to break down this move here on like a 1 minute as well, right, it was very choppy to me on how they delivered this, right? Like you got the 5-minute sign of strength, right, and then they started to you would have had to, for me personally, I would have wanted to wait for like a candle like this one here, 840 to 845, to print, to show some strength, and then to play that candle with my stop in relevance to this low if possible. So something more on the lines of like when you look at it from a 1 minute perspective, right? Like I would have wanted something more on the lines of like, okay, 847 to 848, we're playing back into the 50% of the candle, right? Something like that, maybe, right? But a lot of my setups that work out for me a little bit better are ones that align on the 15 and 5. Right, so if I'm in a right 15-minute location, which, like I said, being inside this area isn't bad, and then looking for usually just a 5-minute structure break. So like my typical setup, right, especially for buys, is the best buys happen for me when price capitulates. So when price does what you're seeing here, but to the downside, and then those shorts that sold fast moves like halfway, they start to cover and buys start to fill. So in this situation, it's more like if I'm gonna buy a position like this, like say I'm buying in here, I really just want to see just this high taken at most, because everything past here, right, in my eyes is what I call noobs buy tops and sell bottoms, okay? And so they trap people right before they're going to go take what? A high, right, that everyone knows and can see. And so I thought those were good buys, right? If you took those positions anywhere below New York Open and framed them off that 5-minute area, there's definitely 1 to 3 risk rewards on that type of setup, right? So if you're buying below New York and you're framing it off that 5-minute candle, like I always talk about, right? I do believe you could have probably found a 1 to 3 setup that would have, if you were just shooting for the 5-minute high, which a lot of times we are, that would have produced potentially, a 1 to 8 R situation, or if you cut it at the halfway mark, like a 1 to 4. So the reason why I say you want to be very A to B in a target environment is because unless you have the move inside of like a mass, like inside the accumulation, right? It's like, so the example, this just didn't happen to be at the time I like, but this is definitely mitigation accumulation I like to see, right? It just didn't happen at the time that I like. So so it makes it a little different, right? Because we could have been shooting for, like, if we're shooting inside of an accumulation here, we definitely could have been shooting for a previous day's high, like it delivered, right? Like I said, just no one knows that that's going to happen in one 15-minute bar. Now, okay, so we identified like that 15 5-minute area. Everyone thought the market was going to short because it had blasted like 800 points, and then they tricked them here at the New York Open and pushed price up almost 160 plus handles to go up into that 24,000 level that we talk about, 680, right? Market loves 80s and 20s, right? So price disrespecting people. Yo, what's up, Chris? And price disrespecting people inside that 80 level was very classic, right? Because at this point, it's like a roller coaster, right? If you guys have ever been on a roller coaster, it goes 1, 2, 3, 4, and then 5, right? And that click. So like, it'd be like you're starting to click as you get up the roller coaster, and then all of a sudden it's getting ready to get to the top, and then it just rolls over, right? Boom, boom, and you're going down, okay? And so like a lot of times I'll take, sediment from, specific text messages or, group chats when people hit the group chat, and their eyes can see specific things, right? So for example, there was people, hey, I know it's high in the position, but I'm wanting to buy, like, so let's say they want to buy something like this, right? And they're like, oh, there's double tops, like, or maybe they're seeing the double tops, like right here, like this. And then they're like, well, I'm going to rebuy it when it gets over here, right? Like, because it's going to be like this, and it's just going to bounce and hit that. What they don't see, though, right, is those resistance, they become targets in the future, and they could become targets in that same day. It just depends on the location of higher time frame. But they also kind of show you a sign of either shelving, right, like price is going to go higher, or that's going to be a future target because price resisted that area, which is an 80 level, which is algorithmic to me, right? And so what I really thought was an even better play than playing the New York opening range was the shorts to the downside. Reason being was because I got that message. Again, because the other thing was this 15-minute. You had 10 a.m. to 10:15, then you had 10:15 to 10:30, and now the London closes at 11:30 Central Time Zone. So I was kind of basing it off of that, which 10:30 is not the time. But I did see that there were so many people that were filling that the buy orders here and wanting to get this to continue long and just push through that high. Like everybody was wanting above 24/7. That I thought there was a really, really good 1 to 3 position. And I believe, Chris, this is the one that you took, bro. I was actually on a phone call or like a video chat with Tay at the same time, and we were talking about, this is a good spot for when price was going to go short, right? So this was around 10:30 to 10:35, and then going into like that 10:35 to 10:40, 10:45 time to like where it broke down. And we were talking about, the first place you always want to look at in the sequence of things is when buyers don't get that delivery of that push through the highs, that New York low, right, that was set here because this was New York Open, right, that New York low was here. Right, that was that New York low. So on the sell side, you know how you were saying like, hey, I think I may have cut this short just a little bit. Well, what you can do, right, on a position when it goes like directly into your favor and is like in closing in on your 1 to 3, what you can do is cut half your volume. So let's just say for hypotheticals, you have 2 contracts on, you'll cut 1 contract and let the runner run to the 1 to 5 zone. Or if you think like, okay, it may go farther than that, then you want to have a liquidity area target, so a structure break or something like that, right? And I thought the area that really would work well is if price did what it did right here at 10:55 going into 11, coming down and closing lower low through that area, and that produces you almost like a 1 to 10 R. Now let's say, like I said, you cut half your position at the 1 to 3 mark. Well, that's still a 1 to 5, or excuse me, a 5 R trade on a partial, which is insane. So I thought those were, I thought those right there, and the way they delivered. Now, I would say this: I wouldn't have seen it personally as well on a 1 minute, but because of how the 15-minute looked here, right? I liked how this candle engulfed and closed and left the equal tops, and then I was just looking for price to deliver back where the trailing, where I would have trailed my risk on. If I had a buy, is what I asked myself. Where would I have trailed my risk if price continued to go higher here, and I would have trailed it to here? Right, and so like that 15-minute, as soon as 10:30 opened, it looked like this on a 5 minutes. So you had a chance to Like this candle engulfs. So this is how I basically seen it to make it easier on the replay mode. Is at 1 minute it was like still going up, and we got that text message where it was like, hey, like, in the chat, I don't know who it was exactly, but they're like, I want to see this go higher. I know it's kind of high, and it's like you need to write that down because that's the trap, right? When most people know what to do, but most people don't do what they know, right? Like that's the whole game of trading, right? Most people know what to do, but most people don't do what they know. So like if you're telling yourself, this, and this, and then it happens, and that's something psychological you got to work with yourself. But we all do it, so I'm not saying it like I'm perfect or something. But as you can see there, that candle right there at 10:25 to 10:30. I'm trying to see where the candle structure was, because like I said, I didn't play any of this live, but I've seen this area here, basically on that 5 minute. And I like the time of, when I was anticipating as the London close, 10:25 to 10:30, and then you get a candle that basically tries to fill, which was, it's hard to see here, but it was a 5 minute imbalance at one point, right? Inefficiency, fair value gap, whatever you want to call it, and then price just closes bearish, and then this next candle opens 10:35 to 40 and just starts to die and head straight to the New York open low. Yeah, bro. Like I thought it was a great trade. Like honestly, out of all the ones I would have took today, because buying this would have been. This is something I learned a while back, and I'll teach about in the Discord. Is like what's high and what's low, right? So, for example, this is our low right here on the day, and then this would be our high where that red scoop is. Now, how I was taught to trade and how to read the markets was, this is everything below that 50% mark, right? So this mark right here, everything below this is where the best buys of the day pretty much happened. And then everything above here, right, above the 50, is pretty much where the best sells are going to happen. And if you take a buy, this is called note card trading. And if you take a buy in this situation, you either want to get that delivery through the previous high, or you want to be very, 1 to 3, 1 to 5 secure. Because if it doesn't go and break, most likely it's going to fall back into the 50% range of the day. And that's what we kind of started to see, right? When you start to look at this price, is that, as they got into these high areas, yes, buys are going to work, and you are going to find demands in the higher parts of the price, but it's still not as good as something like I said down here below market open, below 23,920s. That's where you really want to be. So it's kind of like I'm kind of showing, for tomorrow, a good idea of like where buys and where sells are going to work out the best, just based on where people are going to trail risk and are stuck on emotional, impulsive trades. Okay. So yeah, I thought that was a good trade, bro. Definitely when you look at like from this perspective here too. And then just, I would say this, not like, even though you like I said, if that 1 to 3 feels like you kind of cut yourself short, like I said, just I would position a trade like as much as I can on that 5 minute location like that. And then if it hits your 1 to 3 fairly quickly, like I said, know where your 1 to 5 is. And then if you know that if you know you're gonna hit that fairly quickly, just know where that line graph, right, next structure break is. So like basically it'd be like this. All right, this would be like here, and as soon as that line graph breaks structure, whatever's under that low is like liquidity. Okay, and so like that line graph would have been going basically under New York low, takes that liquidity and closes. Any signs of strength after that break, after that liquidity grab, I'm trailing my risk like all the way down to here. So let's say that you held that position all the way through. The price on the 5 minute right here, 10:55 to 11, goes and closes lower than the liquidity. At this point, I would trail my risk, right, on the remainder just to that 5 minute high where it broke out and showed lower. Because maybe it doesn't come up and do this here, right? Like maybe it just kind of like this candle opens and it goes below these lows and just fills the inefficiency like it does here, right? And never goes back above and falls over farther into that range. I mean, that could be a crazy trade, right? And so, and it happens like that, you know what I mean? A lot of times what I like to do, if I have a trade that I have a partial on something like this, the trade that broke out of the area. So this essentially would have been the trade, if you think about it, that started to break out of the area and close lower than that previous candle right there. So in that situation here, I most likely would have partialed at my 1 to 3 zone, and my runner would have been in alignment with this candle's close. Excuse me, this candle's high, because it would have made the lower low. Next candle would have opened, it would have made another lower low, and I probably would have accepted that until we got like this candle comes up and pushes into the area, the 40, what is that, 450s, let's just say, and then falls over and makes a new low. Well, then damn, I'm gonna probably go ahead and trail it down to this new candle's high instead of leaving it here. So just literally just moving it down to here, if that makes sense, right? Or there's a new candle that breaks out, so I'm just basically just trying to like stay on top of those profits. I could go ahead and move it down to this candle's high, right? But we'd have to look at the R&R on all those. But the main spot, I would say, and especially in the market that we've been in, is just getting to your targets 1 to 3 or 1 to 5, and then if you can break a 15 5-minute structure, or go below, like on the line graph, for example, it's a little easier to see if you're new to it. But anytime you can break below an area like that and take liquidity, it's usually a good spot to be secure in the bag. So hypotheticals, like I sauld, the buys up weren't bad. There was definitely 1 to 3, 1 to 5s. I think the easier trade that would have been, would have worked out a little bit better would have been that 15 5-minute sell side position inside those 24 680s to 24 640s, and then selling it down just to here, and then getting that TP and being able to get out of there. So that's all I really got for you guys when it comes to trade review for today. We'll see what they present for tomorrow. I mean, if you look at like, you keep an eye on like oil, keep an eye on obviously QQQ and where the liquidity is on that, especially going into tomorrow. We'll talk more about it like on the session. And then let's see here. Also looking at gold, just kind of watching the price, seeing how investors are moving in different assets, and then obviously keeping my eyes on this dollar index and seeing, are we going to move lower below 99 now and move back into the fair value gap imbalance here at 98, looks like 98 and a quarter. Right, so that's something that's kind of on my eyes, because if we do start to do that, then I feel like we can fill the inefficiencies, right? Like fill these gaps here on the 15.5 on MNQ, and then start to reaccumulate, which what that essentially means is come down, price comes down and fills these gaps. We get responses, right? Price starts to reaccumulate to then maybe we see price start to send back up. But we're not going to marry a bias. We'll just see what they present here in the overnight. But appreciate you guys watching the trade review. Like I said, today was a no trade day for me, just because, they presented everything I wanted. I essentially just wanted from this accumulation, if it would have stayed like this going into like 7, 8 a.m., like to play positions, all I wanted was a move from here to, even back to the gap, the new week opening gap, right? So where the price we were pushing here at the close, obviously they pushed price all the way down here, which that's a crazy turn, right, and a huge gap. So you go all the way from here to here. That's 300 handles on the gap for the opening week. So all I was looking for was to get from this accumulation to above the high on day, and then throughout the week maybe make our way back to this, and to see that in 1 15-minute candle, that's incredible. So again, I appreciate you guys watching. I'm about to oh, that's what I was thinking. I couldn't think of what I was gonna say. I'm about to release all the stuff inside the for the Discord inside my announcements page on Telegram. So I'll start putting those in the descriptions going forward here on YouTube. You'll see me talking about it on Instagram and TikTok, and yeah, that's where we're gonna be able to grow as a community. So I'll see you guys later today, and have a good rest of your day.